on the Schwab Network. Before we bring in our guest, got some breaking news here. Google Alphabet falling just over 1% on a report that OpenAI is launching a search function on its OpenAI or ChatGPT. Taking a little bit of hit. Pressure coming on the search side of business, whether it's ChatGPT or Perplexity and some others. So we had a little bit of a downturn in there. Google's off of those session lows, but OpenAI adding search feature to ChatGPT, according to a Bloomberg report. So we'll continue to watch that story as it unfolds. But now it's time to bring in our next guest. It's going to be Andy Swan, co-founder at Likefolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking Uber post-earnings. Typically, we talk it pre-earnings. But this stock's down 11% on this report. Andy, I'm not sure if you read through it. It didn't seem like there was a bunch of negative news on this, maybe some guidance that was a little bit lighter than expected. But this stock's getting hammered today. What's your take?
Yeah, I think the bar was pretty high for Uber. This is a stock that, at Likefolio, we've been pretty bullish on for a couple of years. And, stock has nearly tripled in that time frame. So I think the bar was very high and the expectations of growth were very high. What I liked about the report, there was a lot more to like than to dislike, in my opinion. I think as arrogant as it sounds, I think Wall Street's getting this reaction wrong because, what Uber reported that Wall Street didn't like was a slowdown in growth in the volume of ride sharing, which all of our data pointed to as well. If you look at Uber versus Lyft web visits, it's pretty clear that people are using these services or are new to these services at a slower and slower rate. But what I really like about this chart is that Uber continues to dominate Lyft. It continues to outperform Lyft and is essentially burying Lyft in the ground and putting them away for good, and is the dominant player in ride sharing and is second to DoorDash in meal delivery. And it just continues our thinking at Likefolio that Uber is the king of local logistics and will continue to be that. And so when we look at Uber, there may be some macro conditions that are leaving less people looking for rides at the moment, but they're able to deliver very high levels of revenue, exceptional levels of free cash flow, which many people thought that Uber would never get to. And so they're executing at an extraordinary level, even in the face of some industry headwinds. And that's exactly the type of company we like to bet on. And that's exactly the type of company that we like. That's exactly the type of stock that we like to look at when we get these types of earnings reactions to what is probably a very temporary problem for the company, because overall, this company has winning in its DNA, and we think that will continue to shine through for years to come.
Yeah, Andy, just the ability of Uber to scale this whole company, right? Scale to the level where they're profitable now. And I mean, we sat here on this show and questioned their ability to become profitable. And turns out scale took care of that really quickly. Now, Andy Swan, which we ask a lot, put on your CEO cap. What's the next evolution for Uber? What else are they going to deliver? Is it the final mile? Do they just want to try to own the final mile for basically anything you want to deliver?
Yeah, I think that's exactly it. I think local logistics, that's what they're great at. What FedEx and UPS are very good at in terms of getting things from one city to the other. Uber is extraordinarily good at getting people or items from one part of a city to another part of a city. And I think that's an extraordinarily valuable proposition, especially as you consider, how much, just like yesterday, we were talking about DoorDash, how much it's become, just embedded in us to expect things to be delivered to us, not within 2 days, which was revolutionary for Amazon, a decade ago or 2 decades ago, but within 20 minutes, within 40 minutes. That's the new expectation, and Uber is able to deliver that for goods and for people at extraordinary scale, at extraordinary convenience, at very competitive prices, and is able to do it on a really consistent basis, no matter what city you're in, almost around the entire world. And so the scale that they've achieved is remarkable. And I think the demand for their services only continues to grow as companies and people find more reasons and more demand to get from A to B, or to get something from somewhere else to themselves. And I think that's where Uber will continue to excel in a really strong fashion and continue to build up that revenue stream while reducing costs over time. I think it's a really, really compelling story.
Yeah, the economy's doing well, right? People are out there spending. That's good. But I think the item of note in this third quarter results were year-over-year trip growth fell below 20% after 6 consecutive gains. Is this a blip? Is this a trend? That's the concern, maybe. But, with your earnings score and the data that you guys have, Andy, 11% drop in the stock. We haven't fallen that much in over 2 years. Are you guys buyers here?
Yeah, been buyers for a couple of years and stay buyers here. I think there's a little bit of you're catching a falling knife to some extent, and there's a revaluation process that Wall Street has to go through when you fall below a key number like a 20% growth rate. And I understand that that's going to happen. And I think that an investor needs to understand that if you're entering, whether it's today or a month from now, where this thing kind of levels out is still to be determined. So there's volatility in the next 30 to 45 days that's inherent in a move like this. But we do think of it as an extraordinary long-term opportunity to get involved and get ownership in an extraordinary company with enormous global tailwinds that are not going to go away anytime soon.
Yeah, expanding their footprint, that's one of their goals. All right, great stuff, great data as always, Andy. Appreciate it.